It is striking how uninterested most people are by their own privacy and confidentiality on the Internet. The era of Web 2.0 has introduced new habits to the world's population, for better or for worse. The development of the Internet and of new technologies has enabled great progress in terms of human and social advances. But, to some extent, this was also done for the benefit of globalist entities and to the detriment of the populations. The convenience of use, the immediacy of the information and the ease with which it's made possible to connect to millions of online services or to interact with billions of human beings around the world, sometimes seems to be free of charge to us, when in reality, all of this often comes at a cost. The main price to pay for millions of Internet citizens is personal data. Big tech, social networks and data mining companies, among many others, built their wealth on their ability to collect our most intimate data and to establish an increasingly precise profile of our lives.
The consequences are much more severe than most people would imagine. So I'll give you an example. Even if you're looking up certain health symptoms, that information is being collected by data brokers and it can be sold to insurance companies in what is basically a loophole in the law in the US. The same goes for your ability to obtain a loan. So based on what you're looking at on the web, a bank might buy information from a data broker that shows them that you're maybe an irresponsible shopper, and that might affect your ability to obtain credit.
My basic pitch, which is that we need to ask the questions about why is it that our most personal data, so think about this as your credit card transactions, your location, your web browsing history, and your health information from online sources. Why are third parties allowed to trade that without your permission? I don't think that should be legal, okay? We've never actually had that conversation. And why is it okay for people who give you email services or application services to scan your private content for their own economic gain?
Juan Tontat is the CEO of Clearview AI, a company that was already controversial for the one service that it offers to law enforcement.
The way it works is after a crime has been committed, after the fact, they look through the video evidence, and sometimes they have a face of somebody they don't know who it is. They can run it through our system, and our system searches only public information on the internet, and they may have a lead to a mugshot or a news article or a social media post of that person.
Now, as health authorities consider how to follow the paths of people who are positive for coronavirus, Tontat says he's been in discussion with federal and state authorities about helping to identify people as part of a contact tracing program.
We're still at not even 1% of what's out there. When you run the numbers, it's kind of crazy how much information's out there. So when that comes to privacy, we kind of have to look at ourselves and say, well, we are voluntarily sharing a lot of this information, and that may be true, but how do we feel about it?
And of course, there is the threat of other actors as well, such as cybercriminals or even more probably, our nefarious regimes. Since the beginning of the coronavirus pandemic in 2020, part of the world's population has begun to understand that many governments around the world were under the control of globalist elites hostile to their interests, hostile to the common good, hostile to social justice, hostile to truth and therefore, hostile to basic individual freedom. Many citizens have understood that behind the pandemic was hidden the project of the Great Reset and the Fourth Industrial Revolution. Since then, a minority of people hitherto unaware of such threats have suddenly realized how important it is to prepare for the eventuality of the dystopian world announced by Klaus Schwab and his friends of the World Economic Forum. And one of the greatest challenges of the near future will certainly concern our ability to maintain our independence and our economic sovereignty, as individuals, as citizens, as family and community members. In Europe, for several decades, many governments have betrayed the people and sold off our monetary sovereignty to the benefit of the European Central Bank. The very same European Central Bank who is now testing the large-scale implementation of the infamous CBDCs, that is, the central bank digital coins, also called the digital euro. The implementation of the digital euro will make the monitoring of banking transactions much easier for the globalist states in Europe. If the purpose of this would be to track down the financing of terrorism, the mafia's shenanigans or the political corruption, this would be a good thing. But the past 2 years have shown us that the current globalist regimes will most certainly use this new technology to control and persecute the ordinary people like never before. In France and in other countries, for example, some political parties went as far as to demand the blocking the bank accounts of people who dared to question the COVID mandates. And already, in recent years, prominent dissident figures or medias in the US and in Europe have been literally banned from their banks or from online financial services such as PayPal, Stripe or Coinbase, just because they held political views that were deemed unorthodox by the current doxa. Surely, the digitalization of monetary exchanges has had positive effects for local and international trade, but at the same time, the digitalization of money could also usher in the enslavement of peoples through economical means. Today, the pretext is the health emergency, but tomorrow, the pretext could be the ecological emergency or the safeguard of the principles of the so-called democracy. The globalist elites will tell you this, while they hug each other without masks in their ivory towers, or while leaving their private planes, coming back from a trip in Dubai or Saudi Arabia. Now, this globalist tyranny is nothing new. On the economical level, many claimed that Bitcoin would be a groundbreaking solution for the masses to resist that tyranny. Well, let's assess that claim for a minute. More than 10 years ago, many early members of the Bitcoin community were driven by a cyberpunk and libertarian ideal. According to them, Bitcoin enabled individuals to gain actual control over their money. And in a sense, that ideal has materialized into reality. At least, to some extent. Without Bitcoin, the cryptocurrency market would not exist today. Without the Bitcoin technology, there would be no Monero or Haven protocol. On the other hand, Bitcoin, as such, has its limits. Bitcoin and the vast majority of current cryptocurrencies operate on public blockchains. So, in a certain sense, Bitcoin is even more traceable and even less anonymous than a traditional bank account. Basically, your traditional banking account can be monitored by your bank or by the government. But, all the details of your Bitcoin or your Ethereum wallet can be monitored, not only by your banker or by the government, but also by literally anyone, from your closest friend to your most deadly competitor. Moreover, the centralized platforms themselves often censor and refuse transfers of what they deem to be dirty Bitcoins. Once again, this is arguably good when it comes to block scammers or dark web cybercriminals who seek to sell their assets. But in reality, certain well-known centralized exchanges will also block Bitcoins coming from non-KYC platforms such as TradeOga, for no legitimate reason. To better understand this Bitcoin problem, let's listen to CTO Larsen.
That will be 1 coin, please. Wait. I see that you have 10 coins in your wallet there. Then the price is 2 coins. He also spent 3 coins on a bottle of champagne last weekend. Who are you? I'm your neighbor. How do you know that? And your colleague, Mr. Anderson, he earns more than you do. 20% more. What? He does? And who are you? I'm your competitor. I'm checking your pricing models and who your customers are. Bitcoin and Ethereum are too transparent. Frankly, the consequences of using it in real life becomes ridiculous because it lacks all kinds of privacy, unlike the old banking system that actually has privacy. In the traditional banking system, the individual has access to his account, but your neighbor and your competitor does not. And while, for example, in the US you have the 4th Amendment and so on, in practice your tax authority and other agencies can definitely check your accounts when need to. And with Bitcoin and Ethereum, it's not like IRS can't type Etherscan in the browser, guys, and check your Uniswap history. It's more transparent. The reason that some of these agencies are so upset with crypto, I think, is that they're just not used to having the same access as everyone else. They're used to having some privileged access that others don't have. It's like a VIP sign to the entrance of a club. If you remove that and everyone have to go through the same door, the VIPs will be upset, even if it's a better door. But wait, you say, aren't wallets pseudo-anonymous? No, they used to be maybe, but no. CipherTrace, Chainalytics, Elliptic and many others are excellent at attaching identities to transactions. And your ENS domain isn't exactly going to help you stay underground. So pay your taxes, folks, because Bitcoin, Ethereum and all their cousins are more transparent than banks, not less.
It was to anticipate and to remedy such privacy issues that Monero was created. The developers of Monero have somewhat fulfilled the original promise of Bitcoin, which was to offer a true peer-to-peer cash system. Thanks to its ring signatures and its stealth addresses, Monero effectively allows users to make transactions in an untraceable and unlinkable fashion to the eyes of the public. On a technical level, Monero has therefore brought an innovation of inestimable value to the cryptocurrency ecosystem. However, on a practical level, Monero has its own flaws, namely the constant exposure of its price to the fluctuations of the market. But this defect is not specific to Monero, since it concerns virtually every non-stable cryptocurrency on the market. This is indeed the paradox of the cryptocurrency market. Satoshi Nakamoto created Bitcoin to escape the omnipotence of central bank currencies and to allow the unbanked to gain economic sovereignty. Yet paradoxically, if the cryptocurrency market has experienced such an explosion, it is mainly because of the purely speculative interest of most of its actors and therefore, because of the massive influx of central bank-issued fiat money into the market. Paradoxically again, the cryptocurrency market is therefore closely linked to the current banking system. The common speculator buys cryptocurrencies on Coinbase or Binance, in the hope of being able to make a profit and resell them in dollars or in euros. And this is quite normal. No problem with that, in my opinion. However, the current state of affairs might seem paradoxical, or even hypocritical for those who have been saying for years the following motto: buy Bitcoin, short the banksters. Well, the very same idealists and maximalists are now working hands in hands with the globalist regimes to integrate Bitcoin in their rigged system. To be clear, I am not a libertarian. In fact, I define myself more as a liberal social in economical matters, and as an integralist in political matters. Therefore, I'm essentially in favor of a strong and sovereign state, especially on monetary and moral issues, provided that such a state would respect and protect the common good, the family and the individual freedoms. We all have our own views on the world, the economy and politics. For those of us who understand the current march of this world, we may have our differences of opinion, but I assume we all understand the future of finance and the dangerous plans of the globalist mafia. If I am fighting the globalist governments today, it is because these regimes do not respect the common good, nor do they respect and promote social justice, nor sovereignty. Therefore, these regimes despise and endanger basic individual freedoms. These 2 last years have sufficiently proven this, and many people have come to realize that. To combat this deeply unjust and predatory oligarchic collectivism, we therefore have the moral right to use financial tools in order to protect our economic sovereignty as individuals. Cryptocurrencies can greatly help us to achieve this goal, but, on the condition that these cryptocurrencies are untraceable, uncensorable, properly decentralized and above all, that they easily allow holders to reduce their exposure to the market without having to use a centralized gateway. Today, as far as I know, there is only one single blockchain that can achieve these goals. This blockchain is the Haven Protocol. The Haven Protocol inherits most of the code and the advantages of Monero, making it an absolutely untraceable and very secure cryptocurrency. But where the Haven Protocol is, in my opinion, truly revolutionary and superior to Bitcoin and Monero, is that this blockchain is literally an offshore bank account, accessible to anybody, from a simple computer and in a permissionless manner. The Haven Protocol has its native token, the XHV coin. But, more importantly, In addition to that, it also has a range of synthetic fiat and commodity assets whose value automatically reflects the value of real-world assets. Thus, in addition to the XHV coin, this blockchain also contains assets such as XUSD, XEuro, XBTC, XGold or XUAN. These synthetic assets are issued according to an algorithmic process. Imagine, for example, that, as we speak, the value of one XHV token is $1. Now, let's say you go ahead and access your Haven wallet in order to obtain the amount of $1,000 in XUSD. For this you will need 1000 XHV, which you will convert into 1000 XUSD. During this process, the 1000 XHV will be burnt off the blockchain so that the 1000 XUSD can be generated. Conversely, now imagine that you have 5000 €euros on your wallet and that you want to obtain the equivalent in XHV. Assuming that XHV is priced at €5, then you will get 1000 XHV in exchange for your 5000 €euros. During this process 5000 €euros will be burnt off the blockchain and 1000 XHV will be issued. The Haven protocol's money creation process is therefore elastic, adaptive and organic. Money creation is based on the demand for a particular asset. This process is essentially algorithmic and therefore differs from the model of stablecoins like USDT or USDC. However, if the issuance of X assets is algorithmic by definition, these X assets are still fundamentally supported by a true representation of value, namely, the value of the Haven ecosystem. That's why it's important to understand how revolutionary this technology is and how extremely undervalued the Haven protocol is, as we speak. There is no doubt that we are moving more and more towards a society of permanent monitoring and control. As more and more people come to realize the threats that big data and oligarchic collectivism poses to our privacy, more and more people realize that this mass surveillance will soon apply to savings and bank accounts, thanks to the CBDC technology and thanks to the zealous collaboration of the globalist corporations. To escape this, many people choose to invest in traditional assets like real estate or gold. And that is a very good thing. However, real estate and gold are not practical means of exchange for day-to-day affairs. For our daily expenses, such as shopping or trading goods from human to human, what we need is a fungible and practical currency. That is to say, a secure, stable, transparent, yet private and anonymous electronic money. Thus, the digital assets of the Haven protocol are exactly what the free world needs to combat the globalist oppression and the oligarchic collectivism. Now, let's put aside my ideological bias and come back to a more concrete and technical approach. As we speak, the XHV coin is priced at $13, but many community members consider this token to be still incredibly undervalued and claim that its value should really be somewhere between $400 and $1,000. It sounds hard to believe, even for a Haven maniac like me. First, consider this: the Haven protocol is driven by extraordinary fundamentals, and yet, this blockchain still remains relatively unknown. It is only listed on 3 big exchanges, which are KuCoin, Tradeover and Bittrex. Therefore, it still has quite a modest trading volume compared to other crypto assets and notorious normie shit coins. Most importantly, it has a very low market cap and circulating supply, to say the least. In fact, a quick examination at the order books shows that whoever who would plan to buy $1 million in XHV tokens would immediately raise the price to $50 or even more. One of the most exciting prospects for Haven is that it will soon be integrated on large DeFi platforms like Thorchain, which already have 200 million trade volume per day. The XUSD would be a perfect alternative to the very shady USDT token on these decentralized exchanges. Indeed, the US financial authorities are putting more and more pressure on the practices of companies like Tether, which issues billions of USDT on the market every month, without providing tangible proof that these gigantic amounts are actually backed by real assets, as Tether claims it to be the case.
So, this chart is Tether's market cap. basically, because Tether's worth $1, whatever their market cap is how many Tethers are in existence, actually. It's a pretty easy way to track how much they've been printing. And people call Tether sort of the central bank of crypto because they seem like they can just print whenever they want. Now, if you guys remember, the New York Attorney General investigated them and found that Tether lied when they said that they were always backed 1-to-1, and that from 2017 to like late 2018, like November-ish, they were unbacked, right? And then in 2019, they changed their disclosure to say, yeah, we're actually not backed 1-to-1. We've been lying to you guys pretty much for our entire existence, but don't pay attention to that. But what I want to draw your attention to, guys, is, okay, so this chart that I have in front of me is Tether's market cap during the time that the New York Attorney General says they were unbacked, right? The New York Attorney General says, for sure we know at this point they were lying to people. We know that they were not telling the truth, okay? So look at this chart, and I'm going to slowly take it. So this is the end of 2018, beginning 2019 here. This is when they changed their disclosure. What I'm going to do is I'm going to slide this over, and you're going to see how Tether has progressed and printed money after being found to have lied to people. Because the big question is what are they not telling us? What are they telling us? So watch this. This is Tether's activity since the New York Attorney General determined they lied. This is the state of affairs with crypto, guys. The people we think who might be falsely inflating the market, this is where we knew they were lying to us. This is now the state of affairs. Tether is now worth more than Bernie Madoff's Ponzi scheme at its height. Tether is now worth $72 billion, and they've gone completely mad with how much they're printing. And again, we know this is not USD backed. Tether themselves will tell you that they're backed mostly by commercial paper. Ask them whose commercial paper do you hold? They won't tell you. In fact, they'll block your FOIA request to find out, as we talked about in this video over here. I mean, if you look at just the past 7 days, you can see that the printeroonie is going crazy. They're just printing the dollary-doos, dude. Look at this. They went from, what, like 70 billion market cap to a 72.5. That's $2.5 billion in 7 days, ladies and gentlemen. Let's give it up for them.
We can therefore reasonably imagine a massive issuance of XUSDs once the Haven protocol will be integrated on ThorChain. From there, we can also imagine a more massive use of XUSD and other X assets on such decentralized platforms, especially when these decentralized exchanges share the same concern for privacy and financial sovereignty. Now, hear this, and pay attention: the more XUSDs are issued on the markets, the more the price of the XHV coin will explode. This is an inevitable mechanical process. It is estimated that nearly $32 trillion are currently sleeping in various tax havens around the world. Some expect that a part, however small, of the holders of these offshore accounts could at some point see the benefits of putting some of their wealth into the X assets of the Haven protocol, which obviously represents a much better alternative than Bitcoin in terms of privacy. Even a tiny fraction of these $32 trillion would propel Haven's market cap to untold territories. Note that my aim here is not to deny the legitimacy of the concept of tax. I also don't encourage you not to pay your taxes. All I'm saying is that the Haven protocol is an ecosystem that could both benefit the average citizen, but also represent a solid alternative for the big international billionaires who hide their money in tax havens, for good or bad reasons. Secondly, consider that the market cap of the stablecoin market is currently about $137 billion. It had reached around $150 billion during Bitcoin's last bull run in April 2021. Consider that if the XUSD took merely 1% of the current stablecoin market, the XHV coin would deflate in such a manner that it would mechanically be priced somewhere between $200 and $350. Once again, let's CTO Larsen speak about this.
Privacy has moved up much higher on the agenda, both in terms of industry focus, with Quentin Tarantino launching NFTs on the Secret Network, and in terms of regulatory focus. Stablecoins have become both much bigger phenomena and facing much more attacks from regulators. Finally, time for tokenomics. I just now actually came across this great article from last year. I just haven't seen it before. He starts with a circulating supply of 14 million XHV and a market price of $3. As a result, the XHV market cap is 42 million at the start. Then he writes that 1% of the XHV circulating supply, 1% of the market cap, is used to mint 42,000 XUSD in each step. Then his first model assumes a market price increase of XHV so that the market capitalization remains constant. I've recreated this model, and I think he didn't mean to write that 1% is used to mint. I think he meant to write 0.1%. He ran his model until $200 million market cap of XUSD, then he got a market price of XHV of $360. And if we check in my model, at $200 million of XUSD, I also got XHV price 360. I've drawn this on a logarithmic scale. XUSD grows on the left scale here, so 200 million would be somewhere here. XHV drops linearly on the logarithmic scale, and XHV price grows in a straight line also on the logarithmic scale. In this first model, the price of XHV just grows so that the market cap of XHV stays constant. That is slightly unrealistic. Of course, the market cap of XHV would also grow. So he made a second model, and I've also built a second model here where the market cap of XHV also grows. I've built it so that the XHV market cap and the XUSD market cap has a similar order of magnitude at least. And in this model, when XUSD market cap reached 200 million, the XHV price is $100. Maybe this seems a little unintuitive at first, but if you think about it, it's not. When XHV price grows faster in the beginning, you need to burn fewer of them to get the same XUSD. The guy in his model 2 got the price of $160 at $200 million market cap XUSD. So I was even more conservative. Now, here's the thing. I cannot predict the future, neither can you, neither can anyone else other than some higher power. I didn't know Haven would be hacked, neither did you, neither did anyone else except maybe the hacker. But I knew that it was definitely a possibility that something would go wrong, and that's still the case. You can't get something with a 10,000x upside with no risk, that you just can't. But trading is about possibilities, not about predictions. And what are the possibilities then? Is a $200 million XUSD market cap a possible endgame? No, it's not. There is no scenario where the endgame is that Haven becomes a small-sized stablecoin. It's either going to fail for some totally unknown reason, or it's going to become much, much bigger than $200 million. Remember, Tether is 73 billion. That's almost 400 times more. If we just got to $1 billion in this model, the price of XHV is $2,000. I'm not going to continue this model beyond 1 billion now because some of you might get too excited.
Of course, we are not there quite yet. To get there, the Haven protocol will have to be quickly integrated into decentralized platforms like ThoughtChain. It will also be necessary to make the public understand that they have every interest in preparing for the Great Reset right now, by protecting their economic sovereignty and therefore, by investing part of their capital in the Haven ecosystem. And in order to promote this ecosystem, we are also doing our part. This is why we are launching the Haven City platform on November 18th. Haven City is an e-commerce platform where buyers and sellers can trade goods using assets from the Haven ecosystem. To be clear, Haven City is not one of those dodgy darknet markets. Quite the contrary, Haven City is a non-KYC clear web market with strong ethics. No illegal or morally reprehensible product will be tolerated on the platform. But except from that, you can buy and sell whatever you like, whether it's your car, your books or the product of your legal hemp production. The idea is to defend the idea of the free internet and eventually to destroy the monopoly of platforms like eBay, Amazon or PayPal. Our challenge is to succeed where platforms such as OpenBazaar failed. And I believe OpenBazaar failed because most people don't use non-stable cryptocurrencies, such as Bitcoin or Litecoin, as means of exchange on e-commerce websites. They only use it to hold, trade or speculate. But now that we have a set of private stable coins, Haven City could be the perfect spot to get people to use their XUSDs just as they would use their fiat money on Amazon or eBay. It goes without saying that Haven City shares the same concerns for privacy and security that the rest of the Haven community. Our servers are located in Europe and are therefore protected by the GRPD laws. Once again, no KYC is required to buy or sell stuff in Haven City. No personal data will ever be stored or sold by us. In the near future, if Haven City encounters the expected success, we plan to move our servers into even more privacy-friendly jurisdictions. In the future, we hope to be able to extend the services offered by Haven City, for example with the creation of a metaverse where avatars can buy and sell digital products with the Haven ecosystem. We are doing our part to promote and expand the Haven ecosystem. Now, it's up to you to do the same. Best regards, Havenly yours.